We're talking about a game-changing biotech firm that's not just treating diseases, it's transforming how lives are saved. The name is Ceribell Inc., listed on Nasdaq, and it's on a mission to revolutionize the world of neurological disorders. But the big question is, could this be your next multi-bagger stock? Let's decode the numbers and find out. No hype, just facts. We'll begin with the company's valuation, which often gives us the first clue about market sentiment. Ceribell has a market capitalization of around $538 million, placing it firmly in the mid-cap segment. What's more compelling is that its enterprise value is only $365 million, suggesting the company holds significantly more cash than debt. And that's a strong position to be in, especially during volatile market phases. When you dive deeper into ownership structure, the confidence from insiders and institutions becomes evident. Company insiders hold about 4.8% of the stock, which reflects their belief in its future. Meanwhile, institutional investors, who typically do deep due diligence, own nearly 49% of the company. Now that's a vote of confidence from the big players. It's no surprise then that the stock has surged over 450% in just the past 3 months. That kind of momentum doesn't come without strong conviction behind it. And speaking of strength, Ceribell's revenue engine is already showing promise. Over the last 12 months, the company reported $65.4 million in revenue, out of which $56.7 million came as gross profit. That results in a gross margin of over 86%, which is incredibly impressive for a biotech company in its growth phase. Of course, the net income stands at a loss of $46 million, but that's not unexpected. Growth-stage biotech firms often operate at a loss while developing and scaling their technology. To assess stability, we turn to the balance sheet, and Ceribell doesn't disappoint here either. With $194 million in cash and equivalents and only $21.9 million in debt, the company stands strong with a net cash position. Add to that a cash per share of $4.81 and a book value per share of $5.33. And it becomes clear that the company is well capitalized and fundamentally sound. Efficiency metrics like return on equity, 35%, return on assets, 17%, and return on invested capital also remain negative. But that's common in early-stage biotech companies, where immediate profitability takes a backseat to long-term innovation, R&D, and clinical development. The key here is not current profits, but potential breakthroughs. And speaking of potential, analysts seem quite bullish. The average price target is around $33.25, suggesting an upside of over 60% from current levels. Even more notable is the consensus. All 5 analysts covering Ceribell have rated it a strong buy. That's not something you see every day, and it clearly shows Wall Street is watching closely. Still, it's important to acknowledge the risks. The company's short interest stands at 6.5%, and its short ratio is 4.15. That means some traders are betting against the stock, possibly due to volatility or near-term uncertainties. But this also sets the stage for a potential short squeeze, especially if the company releases any positive news or clinical success. Bringing it all together, Ceribell Inc. presents itself as a high-risk, high-reward biotech opportunity, backed by cutting-edge technology, solid institutional trust, a healthy cash cushion, and serious long-term growth potential. But yes, being an early-stage player, the road ahead could be volatile and unpredictable. And that's why the final call is yours. Will Ceribell make it to your watch list? Let me know what you think in the comments. If you found this breakdown useful, hit that like button. And for more sharp and honest stock analysis, don't forget to subscribe to your very own channel, Investment Matters. Catch you in the next video, and until then, invest wisely.